BigBear.ai, trading under the ticker BBAI, is active right now on the New York Stock Exchange at a price of $6.33 per share. It's relatively flat on the day, down just a fraction of a percent, but that calm surface hides a massive amount of intraday volatility. The stock has already swung wildly between a low of $6.04 and a high of $6.60, all on exceptionally heavy volume of over 37 million shares. While many retail investors are looking at this name, whispering about short squeezes, they are missing the most important detail. The cost to borrow this stock is almost non-existent. The real story here isn't a squeeze, it's a fundamental battle over whether this company's recent, massive acquisition can justify its valuation before its cash burn becomes a critical problem. The prevailing expectation, the one you hear constantly on forums and social media, is that BBAI is the next Palantir. It's the mini Palant, a small, nimble company securing critical U.S. government and defense contracts set to explode as AI integration becomes a matter of national security. This narrative is powerful. It's why the stock has seen such incredible pops, and it's what draws in traders looking for that explosive multibagger. The idea is simple. Get in on the ground floor of the next big data defense giant. But the reality, when you look past that simple comparison, is far more complicated and carries significantly different risks. The reality is that while BigBear.ai did recently report third-quarter earnings that beat estimates on the bottom line, its revenue actually declined 20% year-over-year. This is not the hyper-growth trajectory many associate with the AI boom. The company has a history of significant cash burn, a fact that the market narrative often ignores. However, the game changed just a few days ago with the company's massive announcement. It is acquiring Ask Sage, a generative AI platform built specifically for defense and national security for a staggering $250 million. This single move reframes the entire investment thesis. This isn't just a small-cap analytics company anymore. It's a company that just made an all-in bet, leveraging its balance sheet to buy a high-growth platform that already has a significant user base within its target agencies. The market is no longer trading the old BigBear.ai, it's now trying to price in this entirely new, much larger, and much more indebted entity. This brings us to the immense pressure from short sellers. The data is clear. 18.32% of the entire float is sold short. That is an enormous number and explains the high volatility and the chatter you see online. When nearly 1/5 of a company's tradable shares are betting on the price going down, any piece of news creates a violent battle. The short thesis is straightforward. This is a company that has historically burned cash, just took on a massive new acquisition, and is operating in a show-me environment where government contracts can be lumpy and slow. The bears are betting that the revenue from Ask Sage won't come fast enough to offset the cost and the company's underlying financial struggles. But here is the actionable insight for everyone watching. Many retail investors see a high short interest and immediately think squeeze. They are looking for the next GameStop. The reality is that the data does not support this. The short borrow fee rate for BBAI is currently sitting at a tiny 0.56%. That is incredibly cheap. It means that despite the high short interest, the large institutions lending the shares are not charging a premium. There is no panic among lenders, and short sellers are not paying a heavy price to maintain their positions. This suggests the short positions are stable, well-capitalized, and not in immediate danger of being forced to cover. A high short interest with a low borrow fee is a sign of conviction from the bears, not a sign of a looming squeeze. You can find this data on platforms that track short-selling metrics, and it's crucial to look at both the short interest percentage and the borrow cost. They tell two different parts of the same story. What's your take on this? Do you think the low borrow fee is the most bearish signal for BBAI, or is it just a market anomaly? What does show signs of stress, however, is the fails to deliver data. In recent months, there have been significant spikes where hundreds of thousands of shares, and in one case over 1 million, failed to be delivered on time. This can indicate issues with liquidity or settlement, and it often adds fuel to the fire for retail traders who believe the market mechanics are stacked against them. While it's not a smoking gun, it is a sign of significant friction under the surface. So, for those who are just tuning into this name, what does BigBear.ai actually do? At its core, it is a data analytics company. It provides AI-powered solutions for decision intelligence, primarily to the U.S. government, with a heavy focus on the Department of Defense, intelligence agencies, and Homeland Security. They build platforms that take in massive, complex datasets, think satellite imagery, logistics data, sensor feeds, and help analysts make sense of it all to make faster, better decisions. Their work is in areas like predictive logistics for the Army and threat detection. This is why the Palantir comparison exists. But unlike Palantir, with broad, platform-based approach, BigBear has historically been more of a solutions and services provider. The acquisition of Ask Sage is a clear and direct attempt to pivot harder into a scalable platform-first model, which is exactly what analysts and institutions want to see. Speaking of institutions, the smart is definitely involved. Recent filings show that the giants are building positions. Vanguard and BlackRock are the top holders, which is typical. More interestingly, we've seen significant new and increased positions from players like Citadel, Renaissance Technologies, and Geode Capital. This tells you that this is not just a retail-driven stock. Major funds are placing bets, likely attracted by the government-contracted, high-barrier-to-entry nature of the business and the potential of the Ask Sage integration. In response to the new strategy, Cantor Fitzgerald just raised its price target on the stock to $7, seeing the acquisition as a positive catalyst. Looking forward, the future of BBAI rests on a knife's edge. The bull case is clear. The Ask Sage acquisition is a massive success. It integrates smoothly, its user base is monetized, and the combined entity becomes the go-to AI platform for the defense sector, finally fulfilling that mini Palantir promise. The U.S. government, in its tech race, accelerates contract spending, and BBAI's new, stronger product portfolio is there to catch it. In this scenario, the company grows into its valuation, the shorts are forced to cover, and the stock moves significantly higher. The bear case is just as clear. The integration of Ask Sage is a messy, expensive failure. The $250 million price tag proves too high, the company's cash burn accelerates, and the promised synergies never appear. The year-over-year revenue decline we just saw in Q3 was not an anomaly, but the start of a trend, as larger competitors or even Palantir themselves squeeze them out of key contracts. In this scenario, the company may be forced to dilute shareholders with another offering to raise more cash. The short sellers are proven right, and the stock grinds back down. This is the central tension. The expectation is a high-growth AI defense contractor. The reality is a company in the middle of a costly make-or-break transformation that just saw its quarterly revenue fall 20%. Comment below with your view on this. Looking at their government-focused model, do you think BigBear.ai's dependency on federal contracts is its biggest strength or its greatest weakness? In the end, the story of BigBear.ai is no longer just about AI hype. It's about execution. The company has made its move. It has bought its catalyst. The heavy trading volume, the 18% short interest, and the aggressive institutional buying are all just different market participants placing their bets on the outcome of this one critical pivot. The squeeze narrative is a distraction. The real thing to watch is the company's cash balance, the revenue growth in the coming quarters, and any news on how the Ask Sage integration is truly progressing. The expectation of a new Palantir has been set, but the reality of building one is what will determine where this stock goes next.